Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries of the corporate world, and sometimes it feels like we're dealing with a real-life mystery novel. Today we're diving into an 8K filing from 1606 Corp, and let me tell you, this one has some twists and turns that might make you wonder what exactly is brewing behind the scenes. Before we jump in, if you are all about getting the real story behind financial reports, make sure you are subscribed. And if you want to chat about these filings in real time, join our Discord community. Link is in the description. So, what is the big news here? It is all about a debt situation that is getting a bit more complicated. It seems 1606 Corp has been borrowing money and they've officially documented it. In a nutshell, there is a promissory note, which is basically an IOU promising to pay back borrowed money. This note, originally for a good chunk of change, has been amended and redone a couple of times. The company issued an updated promissory note to Gregory Lambrecht, who used to be their chief executive officer and a director. Initially, it was for about $1.2 million, but as it turns out, Mr. Lambrecht loaned the company even more money. So by March 2025, the note was significantly increased to cover these additional loans, bringing the total principal, the main amount borrowed, to over $1.5 million. Now, for the latest development from October 2025, the company and Mr. Lambrecht have signed something called an addendum. Think of an addendum as an extra page or a modification to an existing agreement. This addendum bumps up the principal amount of that note even further, now reaching a total of nearly $1.83 million. That is a substantial sum of money being borrowed. But here is where it gets really interesting. This addendum also includes a provision that allows Mr. Lambrecht, the lender, to convert all the interest that is built up and the principal he is owed into shares of the company's common stock. He gets to do this at a 25% discount off the closing bid price of the company's stock on the day he decides to convert. There is one important catch though: he cannot own more than 4.99% of the company's stock through this conversion. This is a common clause to avoid triggering certain regulatory requirements that come with owning a larger stake. This whole situation tells us that 1606 Corp is relying on significant financial support from a former key executive. The growing principal on the note and the conversion option into stock suggests the company might be facing cash flow challenges or is using this as a way to manage its debt obligations. The conversion option is essentially a safety net for Mr. Lambrecht, allowing him to get his money back through company ownership if he believes the stock price will rise. Looking further down, we see Austin Lambrecht signing off as the current chief executive officer. This suggests a continuity of leadership within the Lambrecht family, even if Gregory Lambrecht is no longer in that active role. The signature date is the 24th of October 2025, which is just a few days after the addendum was entered into, indicating a swift reporting of this material event. Now, what does this all mean? For 1606 Corp, this increasing debt and the potential for it to turn into equity ownership by Mr. Lambrecht could signal a few things. It could be a sign of financial strain, where the company needs external funds to operate and repay its obligations. Or it could be a carefully orchestrated move to bring in strategic investment from a party who knows the company intimately. From Mr. Lambrecht's perspective, this offers flexibility. He is not just a lender. He is potentially becoming a larger shareholder without the initial outlay of buying stock on the open market. The 25% discount is a sweet deal, but the 4.99% ownership cap is a significant constraint. This indicates he is likely aiming for a substantial stake, but not one that would require him to file additional public disclosures or trigger a takeover bid. We can infer that 1606 Corp is likely not yet a large publicly traded giant where such debt arrangements are everyday news. The filing marks it as an emerging growth company, which means it is still relatively small in terms of its public reporting. This often means they have fewer resources and a greater need to rely on existing relationships for funding. Looking at this from a Warren Buffett style analysis, you always want to understand the capital structure of a business. When a significant portion of your debt is held by insiders, especially former executives, it can muddy the waters. Are they providing this capital because they believe in the future of the company and want to support its growth? Or are they doing so because the company is in a bind and this is the only way to get their money back or gain more control? The details of the addendum, particularly the conversion terms, suggest a strong belief in the company's stock potentially appreciating. One key risk here is how this debt conversion will impact existing shareholders. If Mr. Lambrecht converts a significant portion of his debt into stock, it will dilute the ownership of other shareholders. This means their percentage of ownership in 1606 Corp will decrease, potentially affecting their influence and the value of their holdings. The company's strategy here seems to be managing its debt and potentially raising capital through debt conversion rather than traditional equity offerings, which might be more difficult or expensive for an emerging growth company. The opportunity is that this debt conversion could strengthen the company's balance sheet by reducing its debt liabilities and converting them into equity. This could make the company more attractive to future investors and lenders. However, the lack of publicly traded securities mentioned in the filing suggests that 1606 Corp. Stock might not be actively traded on a major exchange, making it even more crucial to understand how these conversions would realistically impact liquidity and valuation. In conclusion, 1606 Corp is navigating a complex financial situation that involves significant debt owed to a former executive. The latest addendum offers a pathway for this debt to convert into stock, with terms designed to benefit the lender while managing ownership levels. For investors or those watching 1606 Corp, this is a critical development that warrants close observation. It highlights the company's current financial reliance and signals a potential shift in its ownership structure. Alright, that is our breakdown of this 1606 Corp filing. What is your take on these debt to equity conversion terms and what they could mean for the company's future? Drop your thoughts in the comments below. If you found this analysis helpful, please give us a thumbs up. It really helps us out. And don't forget to subscribe for more deep dives into corporate filings. Also, check out the Discord link in the description to join the conversation with other finance enthusiasts. Thanks for watching, and we'll see you in the next video.